when we look at the structure and the experience we've had over the globe, this structure, as mentioned by Kwame, is quite standard and works. So in terms of building blocks, we at IEIFC are really comfortable about the way it's been set up. One element that we've seen and that actually has been discussed somewhat heavily is the equity element. I really think that the structure hinges on what the equity players will like or dislike of it. It's fine to have the government and the lenders, banks and so forth looking at it, but the guys taking the first loss are the equity players, and when discussions will happen vis-a-vis their bids and the structure, this is where the most important interest will be somewhat displayed, and you will know whether the structure really works, because they are the ones that will have the first call. So that's the first point. In terms of appetite, actually we've seen great appetite for this project. IFC is part of the World Bank Group, so we get a lot of sponsors coming our way as a gateway to doing business here in Kenya, and we've had many that have come and asked us what we thought of that program, so we know there is a lot of appetite out there. In terms of government credit, indeed, in the end, this structuring of the road program hinges on government of Kenya's credit, what the investors believe it will be and it will not be. And fundamentally, decision number one is whether they want to take it or not. And what I've seen is that, yes, they want to take it. So the road fund and the way things are structured, in my view, are just liquidity elements. How much liquidity do we get upfront with the road fund in terms of having money being already available without having to wait for specific appropriation? So